Is RAST tokenized stock on the verge of a catastrophic breakdown? Or is this the ultimate discount before a massive launch sends it to the moon? The AST SpaceMobile tokenized stock asset is currently flashing heavy sell signals, and the short-term trend looks incredibly weak. Yet, despite the recent selling pressure, a group of vocal crypto and equity analysts are insisting that this asset is completely undervalued at these current prices. Who has this right, and who is about to walk straight into a brutal market trap? Let's look at exactly what is happening behind the scenes. Trading under the ticker RASTS, this is a tokenized asset representing fractional equity or synthetic exposure to AST SpaceMobile. AST SpaceMobile is a revolutionary company building the first and only space-based cellular broadband network accessible directly by standard smartphones. They are trying to eliminate cellular dead zones globally by deploying a constellation of massive satellites that connects straight to your everyday phone without any special hardware. Because their commercial satellite rollouts and carrier partnerships have massive capital requirements, their underlying equity experiences extreme price swings. This asset is under intense market scrutiny right now because the crypto synthetic markets have been highly volatile, and shifting private or secondary market sentiments are keeping traders on edge. Before we dive deep into the charts and data, do me a huge favor. Smash that like button, subscribe to the channel right now, and leave a comment below. Seriously, drop a comment with your blunt prediction. Is RASTS a screaming buy right now, or is it a dangerous trap? Let me know your thoughts, and let's get straight into the data. When you analyze the technical charts of this tokenized asset, the situation gets highly complex. The medium-term price action has shown a clear grinding downward channel with lower highs and lower lows. Short-term momentum indicators like the relative strength index show deep structural weakness, hovering close to oversold conditions as sellers repeatedly push the price down. Every minor intraday relief rally over the past few weeks has been aggressively rejected at key moving average resistance levels. Volume spikes have primarily been on down days, indicating that larger players might be distributing their positions in the synthetic markets. However, we are now fast approaching a historically strong horizontal support zone that has held firmly during past market corrections. If this support holds, it establishes a perfect base for a powerful double bottom reversal. But if it breaks, the technical floor completely drops out, opening the door for an accelerated move downward. This persistent technical weakness is exactly why analysts and market commentators remain intensely divided on the direction of AST SpaceMobile's valuation. Looking at the latest consensus ratings and quantitative trading signals from tokenized asset analysts, sentiment has turned noticeably cautious. We have seen a wave of downgrades to hold and sell ratings hitting the wires. Analysts are raising red flags over regulatory hurdles for upcoming satellite launches, macro liquidity tightening in the crypto asset space, and the high premium currently baked into synthetic growth assets. Multiple algorithmic trading models are flashing negative short-term signals, keeping the immediate outlook for RASTS incredibly murky. This sets up the ultimate debate dominating the financial and crypto boards. Is RASTS genuinely undervalued, or is it a classic value trap? The bulls firmly believe this tokenized asset is on a massive discount. They argue that owning RASTS is all about securing a rare piece of the absolute pioneer in space-based cellular technology. They view their growing list of global telecom partnerships and future cash flow generation as an unstoppable force, meaning the current dip is a gift to accumulate exposure before the next major satellite cluster goes live. The bears, however, scream trap. They point out that tokenized assets carry unique counterparty, platform, and liquidity risks that traditional equities don't face. They argue that without a stable traditional equity flow, calculating true fair value in these synthetic pools is nearly impossible, meaning retail buyers are simply catching a falling knife based on pure hype. The downside risks here are massive and cannot be ignored. The aerospace and satellite telecom industry is notoriously high risk, where single launch failures or deployment malfunctions can cause massive multi-year setbacks and instantly crush market sentiment. Furthermore, the volatility of tokenized asset platforms means price drops can be violently amplified compared to traditional equity markets. This exact volatility is why retail traders get trapped so easily. Retail buyers see a trendy name like AST SpaceMobile dropping, assume it's cheap based on name recognition and past hype alone, and buy in blindly without understanding the underlying liquidity pools or smart contract risks. They fail to realize that market makers can keep pushing a synthetic asset down for months until the macroeconomic backdrop actually turns favorable. Let's map out the absolute best case and worst case scenarios for this asset. The bull case relies entirely on a flawless execution of AST SpaceMobile satellite launch calendar and a sudden wave of liquidity into the tokenized ecosystem. If their next major satellite array achieves total operational success, or if they secure a massive new regulatory approval or carrier funding injection, institutional demand will skyrocket. This would trigger a wave of aggressive upgrades in valuation models, sparking a massive short squeeze and a violent amplified rally back to fresh all-time highs for ASTs. On the flip side, the bear case is a nightmare scenario of unexpected launch delays, technical failures in orbit, regulatory crackdowns on synthetic assets, or a broader crypto market crash. If high interest rates continue to squeeze speculative capital out of tokenized platforms, liquidity will dry up, forcing prices down quarter after quarter. This would trigger a vicious continuation lower that could wipe out the vast majority of the asset's trading value. When deciding how to play this asset, you must clearly separate the short-term outlook from the long-term perspective. In the short term, expect highly choppy, frustrating, and incredibly volatile price action. The negative technical momentum and cautious analyst commentary will likely act as a heavy ceiling over the tokenized stock for the next few quarters. But if you lift your gaze to a 3 to 5 year horizon, the fundamental landscape changes completely. The global demand for ubiquitous cellular coverage is expanding exponentially, satellite to phone connectivity is becoming a necessity, and AST SpaceMobile sits at the absolute forefront of this technological shift. So, what is the ultimate move here? Are we looking at a temporary cyclical low that will reward patient investors with massive wealth? Or is this the beginning of a fundamental breakdown that will crush anyone bold enough to buy the dip? The charts are screaming danger, but the long-term potential of this space telecom pioneer hints at massive possibilities, leaving the entire market guessing what happens next.